What is up, guys? Taiki here, and welcome to episode 6 of the Crypto Market Wizards podcast. Today, I have here with me Arthur0x from Defiance. How are you doing today?
Hey, I'm doing well, Taki. Thanks for having me here.
Yeah, of course. No, it's an honor to have you. I remember, I forget if it was 2020 or 2021. I was watching Up Only, and you came on. You're talking about being in the Synthetics Discord and just like clenching your fists with your diamond hands. And now 3 years later, or 3 years later, you're on this channel. I mean, that's great. Um, how has the crypto markets changed, do you think, since your last on Up Only?
Oh, certainly a lot of changes have happened. I think the biggest one is there has been a very big shuffle in the some of the biggest organizations and individual in the space. Some of them have collapsed, and as a result, we have to, uh, you know, start from scratch in some of the infrastructure. Like, I think the entire centralized lending part, especially in the under collateralization department, is basically non-existence right now. And this was a very prominent part of the previous bull market, which I would say probably feels some part of the rally.
Yeah, I got it. Do you think it'll ever come back? I think it's healthy that maybe the under collateralization lending has gone away, but I'm sure that if we do see a bull market and there's more demand for leverage, it will come back. Do you think it's going to
Yeah,
happen more
yeah,
on chain or? Yeah,
yeah. No, I think it will definitely come back. With there's always a demand for leverage. I think it will take some time before uh, people are comfortable lending out money on the under collateralized basis, and there will be a higher demand of transparency and reporting requirement. I think that will take at least 1 to 2 years before that happen on a more major scale again. Yep.
yeah. And I noticed that on your Telegram you have like the little bull icon. Do you think we're at the early stages of bull market? Is that where your headspace is?
Yeah. So I think this is actually I'm very bullish. I think the market have definitely bottomed, but it really depends on how you define bull market. If you're talking about like a 2021 kind of bull market, I'm not 100% sure we are there yet. But I think the market have bottomed, so the worst is over. We are definitely experiencing a mini bull right now. So in that sense, yeah, if your definition of bull market is not the 2021 kind, yes, I think we are in a bull market.
Got it. And I don't think you definitely need an intro, but do you mind telling your audience, I guess, how you got into crypto trading, investing, and what you're doing now?
Yeah, so I've been investing since when I was 20 years old. I discovered crypto in 2017, and this asset class has fascinated me since then because it is one of the very few asset class that is global in nature, where you can still actively participate in shaping the outcome of your investments. These kind of opportunities doesn't present itself that often in other asset class, and usually they are already very mature and there's not much room for uh, any normal individual investor to participate in the process and in shaping the fortune of the investments. Yeah. So, and after I joined the space, I've done a couple of different things. I run my own startup before. I also work for a layer one protocol in the ecosystem growth department. But what I found the most success is in investing. I'm always a very fundamental based investor, and coming out from the 2018 ICO bubble, the biggest question everyone was asking is there any fundamental use case for crypto besides speculation? And I think there is. And I think finance will be the biggest use case of crypto for the foreseeable future. That's what led me to dabble in the DeFi side at early 2019. So very early user of all the early stage DeFi protocol, and such as Synthetics, Aave, Uniswap, and that kind of set me very well to capitalize on the opportunities that present itself during the DeFi summer. So building on that success, I launched DeFiance Capital in 2020, and over the past few years, we become one of the more well-known and active crypto investment firm in Asia, particularly. And DeFi and gaming is the two area where we have some pretty notable success. We are one of the earliest investors in Axie Infinity, very early into Aave, Synthetics, dYdX as well. Yep.
Got it. Yeah. So I want to talk about one of the articles you wrote roughly 6 months ago, and it talks about liquid venture investing in crypto. And I think you're in the process of raising some money for your liquid venture fund. And I think in this space there's kind of this not hatred but dissent against VCs, and the majority of people that watch YouTube videos, participate on Twitter, I think are retail. So one of the first things you talked about is an imbalanced capital inflows lead to a distorted crypto market structure, and you kind of talk about four broad categories of market participants: so retail, crypto firms, big companies, and VCs. Can you kind of go over what are these distortions that you see in the crypto markets, and why you think that liquid markets are like the best places to look at right now?
Yeah, I think this distortion mainly come from the way that institutions prefer to invest into the crypto market, especially for those of the bigger one. A lot of them do not like to see the volatility of crypto on a regular basis. As a result, they prefer to invest in crypto via a venture capital approach. So they usually look for private deals and invest in them, and hold it until the lockup expire. Um, a lot of the bigger institutions, they do not buy any crypto asset directly. Instead, they prefer to invest in venture deals. And I think that I think a healthy capital market, you need both to function. You need early stage venture capital. You also need capital on the public market to ensure that the market are sending out the right signal. But I think what happened in crypto is this: most of the money, because of how volatile the prices is, they choose to exclusively invest in the venture side. In fact, for our fund, we have actually been passed by quite a few fund investors because they say they only invest in the venture funds. They do not invest in liquid funds. So there's just too much capital chasing a very few good private deals, and a lot of the good projects that already have a token trading on the market, just by the virtue that it's liquid, these institutional investors are not touching them. So I think that is a pretty big distortion. I think they has gradually corrected over the past 6 to 12 months, but back in 1 year ago, this distortion is very big. Almost, I would say, 80% of the crypto fund that were raised are venture fund in nature.
Got it. Yeah, and you mentioned something interesting earlier, and you joined crypto because it's the only space where you can shape your outcome and your investments. Whereas for maybe in stocks, the market is mostly mature. And I think if I'm on Twitter, right, let's say, there's a lot of this idea around, like, why would I buy old bags when I can just wait for new tokens to launch and watch those new tokens pump? But I kind of feel that the next cycle, it might be led by, these tokens that have mostly vested, right? Like, these teams have been building for years. And it's more fair for people to participate in relative to, like VC bags where, 60% of the token goes to insiders.
Yep.
What do you think about this argument around old token versus new tokens?
I think this is looking at it from a very attention focused angle. There is certainly a lot more. I think the fact is the market is always have a limited amount of attention available, and it's always easier for the attention to go to a new token. But does that mean this new token will keep getting the attention? I don't think so. I think one of a very good example is the Solana versus Aptos and Sui this year. So a lot of obviously Aptos and the Sui are the new token. So if you just go by this theory, Aptos and Sui should outperform Solana in performance because Solana is an old token. Solana was in fact, I think, launched in 2020. Yeah, but obviously this did not pay out. Solana captured the lion's share of attention and outperform massively compared to Aptos and Sui and a lot of the other crypto assets as well. So I think this is a very kind of like a very short term kind of thinking. And I don't think if you run like a empirical data study, I don't think the evidence is that strong that a new token will definitely outperform old token.
Yeah, crypto is definitely a narrative-driven space. Lots of attention-based markets, and that's partly because it's really, really hard to value these assets. We have some protocols making money, and you can kind of use PE ratios, but is that really the way retail thinks about buying these tokens? Do you think that the next wave of, I guess, DeFi adoption, gaming adoption, L1 adoption, in terms of price appreciation, do you think fundamentals will matter, or do you still think that it's mostly narrative driven? And these communities, like for example Solana, they might not make that much cash flow, but the narrative around fast and cheap, speed of light, like those types of narratives, like do you think that's going to matter more? Like how do you think about investing in different categories in the crypto space?
I think it's not to say that fundamentals don't matter. I would say that the way you define fundamentals is different compared to a traditional stock market, because fundamental here is encapsulate many different things. In a way, you can say that the community attention is a fundamental, but this kind of thing is fairly irrelevant in most of the traditional finance, probably except for Tesla. Tesla, you as a stock itself, I would say probably a decent chunk of Tesla valuation come from the attention and how many fanboys of Elon Musk it constitutes. But in crypto, this is a part of the fundamentals. So I think it really depends on how you define fundamentals. You cannot just look at it from a pure cash flow revenue perspective. I would say that is a very important part of the fundamentals, but not the only thing. So I think over the years we have also grown in terms of how we approach fundamentals. Yeah, and also I think another thing is like having a good fundamental alone is not enough. You have to have something on the margin. I mean, because if there's no new information, the fundamental is good, but the price have never moved, it kind of means that these fundamentals have already been absorbed by the market. You kind of need some new changes to induce market to reprice this asset. And I think sometimes if there's even something with good fundamental, but there's no new changes, it doesn't need market to reprice the asset. So in a way, I think that it just need to. I think, and this is something that the industry is collectively figuring out what kind of fundamentals you use to measure different kind of projects. And I think that the space have actually matured over the years. I think there was a lot of attention paid to some of the metrics for layer one blockchain. I think right now people look at the TVL, look at the active users, look at the transactions, all those things. So like you have Artemis, you have token terminals, you have the newsletter called Our Network. All of these track all these fundamentals of different crypto project on the fairly rigorous manners. And I think that it has kind of played a fair amount of influence into how people decide to invest into different crypto projects.
Got it. And I kind of want to go back to your article here. And you mentioned that you think that the liquid markets probably present the better risk-adjusted returns relative to, just throwing money into angel investing, seed rounds, or VCs. And you talk about some home run trades, right? Like, like let's just concentrate. Let's just build conviction, buy a few tokens instead of trying to buy 100 different tokens.
Yep.
How do you build conviction? I know you talked about synthetics and Aave in the last bear market. Do you see similar opportunities right now? Maybe the upside is less there because it's more matured, but like, what are the characteristics of home run trades? And how do you size these positions?
Yeah, I think this is definitely one of the toughest part to get it right. I think there's a very good article that complement this article that we wrote. Is by a newsletter called Decentralized.co. It's called The Narrative Rage. I highly recommend that as a reading. I think most of the home run trade is really about in crypto, early into identifying a certain trend that turned out to be way bigger than what people have expected. So I think when you look at it, I think the two most obvious one, DeFi, gaming, and NFT to a certain extent, is these when it become when the home run trade or like investment happen, it's not something that just come out immediately. Actually, like for example, NFT bull market really happened in 2021. But CryptoKitty took off in 2017. It's just that nobody took it seriously until 3 to 4 years later. for DeFi, you can say that the first version of DeFi already exists in 2017, 2018, but it just have not really proven itself yet enough. So again, the market are not taking them seriously enough. So being early into some trend, and this trend turned out to be way bigger than what people realize. Generally, the recipe to a home run trade, and I think this is something that's pretty important for crypto. The second thing about sizing, I think different people approach this quite differently. For us, I think that it's really on a qualitative manner. It's really about sizing to a level where if you are right, it will make a very big difference to your return. But if you are wrong, your portfolio will be fine. So is there like a hard and right number for that? I don't think so, but it really depends on your risk tolerance and the kind of volatility that the market is trading at. So that okay, let's say you say max position is 30%. If let's say you go to zero, your this high conviction investment go to zero, can you make back that 30%? I think in certain kind of market environment, yes, you can. So it's probably fine. But in different kind of market condition, 30% is probably too much. So generally right now, we do between 10 to 20% for any kind of like a high conviction investment we have. So I think that means that we are sufficiently exposed, but not too big that if we are wrong, our fund will be blew up.
Got it. Yeah, so I want to dive into a few things you mentioned there. So you mentioned that these home run trades is to identify a trend early before it becomes a consensus trade, or the sector becomes, or the total addressable market is like much bigger than people anticipated. And obviously DeFi, NFTs, gaming. I think people generally understand those sectors. Do you still think that DeFi is one of those trends, or do you think that there's some new sectors that people are kind of overlooking? And if so, like what are they?
Yeah, so I think right now DeFi has become a pretty big segment on its own. Do I think DeFi as a whole can still do another 100x from here? Probably not that likely, not in the short term. But certain subcategory of DeFi are still very small, probably with less than 100 million TVL, and I think some of them can still deliver very good venture scale returns. So I think it's time that you probably go deeper, like look at certain category of DeFi, and I think some of them still have a lot of potential. Yep.
What are those categories you think?
I think
if you don't mind sharing.
Yeah, we are most bullish on decentralized derivative. I think when you look at all the numbers, it point to the derivative trading sector as the biggest market in crypto. I think the annual revenue generated by derivative trading in the space are probably 10 to $15 billion at a current market condition. If we go back to bull market, I think we are looking at 20 to 30 billion revenue, just from derivative trading alone. So right now, the decentralized derivative trading platform only constitute 2 to 5% of the market share. I think this is poised to grow significantly over the next few years. I think we should at least get to 20% in the next 2 years. So that means even assuming that the total crypto derivative trading volume did not grow, the decentralized platform will still see a growth to 5 to 10 times just because they're going to gain increased market share from the entire market. So I think this is also where the home run will be made. That's kind of one of our highest conviction investment going into the next few years.
Yeah, and I think you're referring to dYdX. I mean, correct me if I'm wrong here, but I'm screen sharing this. This tweet you mentioned.
dYdX is something that we have been very bullish on. We are the lead investor for dYdX for Series B, and we have continued to be bullish on since we have invested. I would say among many of the DeFi team invested, dYdX team, the whole way the product, and it's definitely ranked among the top tier among those that we have witnessed and invested.
Got it. Yeah. So, when it comes to dYdX, as a liquid market participator, I'm aware. I think everyone's aware of those December unlocks. I think the circulating supply is going to go up by like 80%.
Yeah.
Like, how do you think about these unlock events? Maybe from your perspective, you're like, okay, like screw it, like I'm just going to hold through this, stake it and whatnot. But how should people think about unlock events? Of course, all like not all unlock events are made equal, but specifically for dYdX, like how do you think about these situations?
Yeah, so I think Yeah, like what you say, not all unlock are made equal. So I think that first of all, there's two factors you need to look at. You need to look at the made up of the investor base. Are they like long term minded VCs, or are they like a syndicate, a lot of like a smaller check size? The angel are usually more likely to sell because they do not have like a 10-year fund life, and also really depends on how the project is doing. Sometimes some project, that usually a VC sell for two reasons. First, it already achieved the return they are looking for, or they think that it's already fairly valued or overvalued. Second is they realize that their thesis is wrong. This is a wrong investment. They just want to get out. So if both these two conditions are not present, the VC are a lot of the investors are actually incentivized to hold onto the investment because the initial homework of researching, understanding what this project do is already done. So in the sense that they do not need to spend more time underwriting a new investment thesis. So I think the selling is very circumstantial. Like not all unlocks are made equal. And I think the second thing is the market condition does matter. So crypto is a very reflexive asset class. So it happens same for unlock as well. In the bear market, you feel very gloomy about the prospect of the investment. You might want to sell, but in the bull market, say, hey, this can still go up a lot more. Why should I rush to take profit right now? So that's why you heard about the term called bullish unlock in the bull market. So I think that when you come to unlock, it's definitely one catalyst you need to pay attention to, but this factor alone cannot be used to make an investment decision. So I think for dYdX, I personally think this is my personal view. I think the impact are a bit overrated because we have been paying very close attention to the derivative space, and I think right now there's more than 20 decentralized derivative project out there right now. I think probably closer to 30 right now. Um, a lot of the VC have actually invested heavily into this space, but right now none of them have been able to dethrone dYdX as the market leader, right? And dYdX is actually one of the most OG DeFi project. Like they have been building since 2017. And I think this actually create an effect of these VCs. They will be worried about selling a category leader when actually none of the competitors are able to compete with the category leader right now. And from a pure valuation perspective, I don't think dYdX is that expensive. The fully diluted valuation is 3 billion. I know a lot of the other app chain that have not delivered much are trading at 2 to 3 billion valuation. So I think the investor selling are a bit overrated. I think a lot of them would rather hold on to a performing category leader in the space. Because if you sell, what else are you going to invest in? You obviously you have SNX, GMX, but they are fundamentally different model. If you look at other order book exchange, I don't think anyone is that close to dYdX yet. And actually, we invested in some of them, and so we know how well they're doing. Some of them are quite promising, but are they on the dYdX level yet? I don't think so.
Got it. Yeah, and it's interesting because earlier we mentioned that crypto is attention based, and in a way, these unlock events bring more attention, right? So like when these events happen, a lot more people are looking at the price, and depending on which way it breaks, that might actually lead to a trend. And earlier you mentioned obviously you hold a bunch of coins. We can get into that later, but you mentioned that for your highest conviction plays, you're willing to size up to 10 to 20%. Is dYdX in one of those, or like what's in this 10 to 20% like category?
Yeah, I think we go by top downs and bottom up. So top down, we identify the sector we think that is the most investable, and offer the best risk adjusted return. And decentralized derivative trading is definitely one of them because first of all, I think a lot of them already have some sort of value accrual. Like I think most of them are already doing or will do revenue sharing with the token holder directly. So that in the sense you make it very investable, and you are also quite exposed to the cyclicality of crypto because in a bull market volume go up, so that kind of increase the valuation of a derivative trading platform as well. And so it has some sort of defensiveness because it's not a complete vaporware. It captures some value from the trading volume it generate, but at the same time it is also exposed to the upside of a bull market. So in that sense, decentralized derivative trading protocol is certainly some of our top investment from a sector perspective. We also own some layer 1 and layer 2 as well. Everyone's bullish on Solana. We've been bullish on Solana for a long time, and we are glad that we have been able to hold on to some of them even during the very significant market drawdown. And some of the layer 2, we also fairly bullish on Polygon. I think that there's just a lot of information asymmetry about Polygon. So we have some layer 1, layer 2, and obviously some ETH and gaming as well. So I think these are some of the highest convictions sector we have.
Got it, yeah. Solana has definitely been crazy. The Solana manlets, they're celebrating every day. And I feel like, one of the bear cases for Sol was FTX estate and like Galaxy Digital or Research, just like liquidating your Sol.
Yep.
But maybe this was also a bullish unlock. Maybe like the Sol pump also is a good omen to maybe future dYdX price action. You mentioned, Solana, Matic. How do you think about EVM versus non-EVM chains? Because a lot of people that I interviewed, they're kind of EVM maxis. And I also saw that you're bullish Cosmos. So how do you think about, is it more just general category bets where if you think crypto is going to grow, you might as well bet on these L1s? Or how do you think about these investments?
I think in terms of L1, I think EVM dominance is not going away anytime soon. And generally, it will be very difficult for any other layer 1 that do not adopt an EVM to compete with the EVM ecosystem. It's not impossible. I think Solana did that, and I think Cosmos, to a certain extent, managed to do that as well. But they are definitely the outlier than the norms. Because I've been in the space since 2017, and I still remember how many layer 1 have completely failed. They are completely irrelevant right now. So the current market have a lot of survivorship bias where they actually do not see a lot of these layer 1 that do not have EVM and just are completely forgotten and just dead. So it is significant. I would say like a few order magnitude of harder to compete with Ethereum ecosystem if you're non EVM, because the incentive for a group of developers to learn a new smart contract language just to build on you, the incentive are not strong enough because you are a new ecosystem and no user, no tooling. You can give free money, but that only get you so far. So it is possible, but extremely challenging. And I think that most L1, they are not going to be able to achieve that. Doesn't mean but obviously for those who can achieve that, they will command a very premium valuation, like what happened to Solana.
Yeah, and you mentioned your bullish layer 2s and you mentioned Polygon, but I think that's pretty contrarian. I think a lot of people just look at the Arbitrum token or the Optimism token. What do you like about Polygon that you think that the rest of the market isn't seeing?
Yeah, so I think that there's certainly a part of it is about the tech, because when you look at optimistic rollup versus ZK rollup, both have its place, but I think one thing we think that in a more longer term is potentially challenging for the optimistic rollup is look at it. OP right now have no fraud proof, and I think market it is coming, but they have been operating on a no fraud proof model for a while. In that sense, is it like a true layer 2? I'm not too sure. And the biggest problem of I think optimistic rollup is the withdrawal timing. Unless you go through a bridge, you probably take like a 1 week challenge period to get your money back. And I think this is something that ZK rollup are just fundamentally better at. So in a more tech perspective, I think long run, ZK rollup will get more adoption. And if you have ZK EVM, that's obviously the best, because people do not need to learn a new smart contract language just to build on you. So I think that part is a bit overlooked in currently, because this thing that it only matters when it matters. So that make me, and then Polygon have one of the best ZK EVM technology right now. This is, and you have seen that many other teams have adopted the Polygon chain development kit as well. So this is something I think that market is overlooking. And one thing I like about Polygon versus other layer 2 is most of the token is already vested. because it's a very old IEO on Binance, the token holder base is very distributed. There was a big VC round, but unlock started in, I think, early this year, and I think investors who want to sell have sold already. So I generally, it's not saying that the coins have a lot of vesting ahead cannot pump, but I generally prefer, where most of the, there's not that much of a low float, high FDV kind of situation for any assets. Yeah, and I think a lot of the real world, when you look at the metrics of Polygon, it actually is better than what their price performance are indicating right now. So, I sometimes I like to bet on something that's fundamentally sound but still reasonably valued, and I think Polygon fit that category.
Yeah, Polygon always has a soft spot in my I feel like for this channel because Polygon was like the first time that I was like freely able to use DeFi back in Q1 of 2021. They were the first to introduce the $100 million incentive programs, and I was like farming Aave. I was making videos, and then Avalanche copied it, and then like that led to like a secondary pump. You also mentioned gaming. You did well in Axie Infinity. I feel like gaming is kind of I'm not sure. Do you think like gaming and crypto makes sense? I always thought that there was like kind of this disconnect where maybe it makes sense for VCs to invest in the equity of these gaming companies, but the token itself will not really capture value. Do you like how do you think the gaming sector is going to go in 2024 and beyond?
Yeah, so I think we wrote a pretty long thesis on this last year about how we see Web3 gaming, and I think that I believe gaming continue to be the category that have some of the best fit with crypto, simply because it it is something that's also very community driven. And historically, and it's actually a very big industry. Gaming is bigger than both the music and the film industry combined from a revenue perspective. And I think that there is a lot of improvement crypto can bring to the gaming side. So when you think from a first principle perspective, what other sector have a very good fit with crypto after finance? I think gaming is something that come after that. Um, so I think we continue to be very bullish on that. And in terms of the token, I think that it really depends on how how the project design the token. I think on a very idealistic manner is, obviously the equity doesn't matter. You have some gaming governance token that are ultimately accruing the value from the revenue generated by the protocol, and obviously a lot of the game have their own in-game currency. So and if this game get to like a World of Warcraft kind of popularity, some of these currency will be worth something as well. So I think in that sense, I think depends on how you design it. Token can make a lot of sense for games, and I think it's really about the timing. We've seen a lot of very talented builders in the Web3 gaming side, because this is also one of the very few like through crypto they can actually market this to a global audience. And actually, if you do not go through like a gaming publisher, distribution is actually one of the biggest issue for a lot of the game studio right now. Like, and if you go through any like a big distributor, they will take a huge cut of your revenue. So and in some, and they are also faced with a lot of restrictions. So I think especially in Asia, I think we are seeing some of the like a medium sized smaller gaming studio, they see Web3 as another distribution channel where they are not chokehold by this big game publisher.
Got it. Yeah. And we kind of see you kind of see this trend with Frentech too, because Apple they take I think like a 15% charge on all revenues, and then Privy made the progressive web app, and then Frentech is able to go around it. Like when it comes to gaming projects, are you still bullish things like Axie? I also think that Illuvium has gotten a lot of attention recently. Are you more bullish like the existing games that's been building for the past couple of years, or these quote unquote AAA games that raise a bunch of money and they're probably going to ship something next year or the year after?
I think generally we are bullish on games that have a better longevity. So I think not all games are made the same, because there are so many different genre of game right
Yeah,
now.
yeah.
And some game have a shorter life cycle. Like like let's say a single player game that you have like a 20 to 30 hour of playable content, and it's very top down driven. You need the game producer to keep pushing out new content for the player to get engaged. I certainly do not think these games are very suitable for like the integration of crypto, because you do not have the longevity. You finish a gameplay, the plot, then you are done with it, right? But certain games are very community driven and have very longevity. Like I think the top one genre that come to mind are MMORPG, and some 4X game. So I think these category of game I'm more excited about. Yeah, because there's a lot of community input, and also just the gameplay. The game can last for a very long time. There are some MMORPG game after they are published for more than 10 years. There's still a pretty active user base playing it.
Got it. So before I get into more of like the general rapid fire questions, I want to talk about this audience question I got from Mr. John Galt. Can you talk about like why you're bullish Cosmos and then this Osmosis thesis? Do you think Osmosis will become the selling point of Cosmos this cycle as this liquidity hub app chain? And how do you think about valuing these types of app chains? Like should they, for example, like Osmosis, should it be valued as like a DEX or more as a layer one? Like how do you think about like these types of valuation models?
I think it should be valued as a combination of both, because it is, again, like it's both a DEX and a layer one, right? So I think Osmosis, I think that the thread is quite succinct and clear. It is the central liquidity pool of the Cosmos ecosystem. Cosmos have a interoperability center called IBC, and Osmosis right now is the IBC hub right now. So for any Cosmos, so historically Cosmos project always suffer from a liquidity and accessibility issue. Like unless you get a centralized exchange listing, it is very hard to acquire any Cosmos token. Obviously IBC solved part of it, but you still need liquidity to get this token, right? So that's why Osmosis was created partially to solve this issue. And over the past few years, it became the de facto IBC hub. So in that sense, any Cosmos app chain token that want to be traded via IBC, one way or another, they will usually flow through Osmosis. And we are seeing more and more high profile project launching on the Cosmos app chain ecosystem soon. And if they want some IBC liquidity, most likely they will flow to Osmosis. And a lot of the pairs, they also pair with Osmo pair as well. So this actually create a lot of demand for Osmo as an asset, because they need Osmo as a base pair. It's just a bit like Ethereum. A lot of the ERC20, they are paired with Ethereum as a base pair in the DEX. So I think this will actually create a lot of demands for Osmo token, and they also implemented a lot of the token economic proposal, where there's a taker fee that go to the staker right now that they charge as a DEX, and they have reduced the inflation significantly. So I think all of these, and also the valuation is quite cheap. It's trading at a 300 plus million market cap. Compared to a lot of the other high profile project, it's actually fairly cheap. And is the founding team is also a pretty high caliber team as well. So I think in this valuation, if Cosmos ecosystem take off, I think it is probably one of the best proxy you can have. Unless you want to buy other Cosmos token directly, I think that's also fine. But you want like a way to capture the growth of the ecosystem. I think Osmosis is the best one, right?
Got it. Yeah, I really like the way you think. For example, with Osmosis, right? If you expect liquidity to flow into the Cosmos ecosystem in the future, then Osmosis is going to be the main benefactor, and that also creates more demand for the token if a bunch of like these new Cosmos tokens are also paired with Osmo. And then with dYdX, you expect, I guess, like decentralized derivatives to grow market share relative to centralized exchanges. And then, if you think about it that way, well, then dYdX and Osmosis, risk-adjusted returns, probably good. And, most of the tokens have invested and whatnot. Is that kind of like a good way to think about how you think about the liquid markets, as a combination of fundamentals?
Yes. I mean, we obviously, there's a lot of factor we look at, but I think, Osmosis especially have a very clear catalyst ahead. There is a lot of these factors that will bring something new to their ecosystem and to the project itself. And and I think the catalyst is actually very strong compared to their present state.
Got it. So let me go over some final questions. What do you think are common traits of successful traders? Even in the space since 2017, you've seen people blow up. You've seen people be widely successful. Like, what are the traits that people need to have in order to be successful trading the liquid markets in crypto?
Yeah, and I'm always more of an investor than trader, actually. Um, but I think generally risk management is the number one. You know, because obviously I've seen it firsthand. I've seen an organization went from low eight figures in capital to like $1 billion, and they blew up in a few months. So if you do not have any risk management, you will not be able to keep all the money you have made. Doesn't matter how much it is it? And I don't think we need to mention other more prominent examples. There's like quite a few of them in crypto. Like Alameda, they have virtually all the ages a trader can have, and they are still unprofitable. They can see every user stop loss on the exchanges. They have preferential access to the exchange. They have unlimited credit line. They have access to some of the best deal. Like they can do everything, yet they still lost money. Why? Because they have no risk management at all, zero. Yeah. So I think risk
Yeah, this,
management is the number one, and I think second thing is that I think everyone can are fairly have a a trading framework that fits their style and are able to stick to it. And I think in this market, it's actually very easily to be influenced by what other people think and what other people are doing. But if you are just keep rotating and copying other people's like a play or approach, it's not a very sustainable thing, because when they make some mistake, you are gonna follow some of their mistakes as well. So usually some of the best traders I know, they have their own framework and they're able to stick to it.
yeah. Like how do you not be influenced, right? Because I think everyone is on crypto Twitter, and then everyone's bull posting whatever is pumping on any particular day. I think Twitter is kind of like a history channel, right? So it's like whatever happened that day, people are just bull posting, and I guess they're claiming clout. How do you keep your zen? For example, like some random coins pumping. How do you just remain calm in your investments, right? How do you keep your diamond hands? How do you keep your hands clenched despite the volatility?
I think I think you need to also walk a fine line between having conviction and diamond hand, but also willing to incorporate market feedback into your process. So like I like to say nuance is like one of the most underrated thing in crypto. So you need to have a process of incorporating this market feedback, and but I think one thing is just that you need to first of all first have your trading and investment philosophy. Then from the philosophy, you start building a framework on how do you operate within your philosophy, and then you need to figure out how do you take market feedback into your process. So I think one of the like a more concrete example is like you can set a way that you reevaluate your entire portfolio or like your position on a weekly basis, and you need to set some framework and rules that what would lead you to change your mind and exit or enter a position. So in that sense, you will not close yourself off from a new market information that surface, then you should change your mind. But in a way, you do not be too easily swayed, that you will not be just seeing any new flavor of the day and then you need to go into it. And I think one thing that served me pretty well for our framework, I think so. This is something that we are constantly evaluating. Is we generally do not touch anything we do not understand enough, because although you might make enough money on it, this is a money you make from luck, and making money purely from luck alone is actually very dangerous in crypto, because you have a false illusion that you are actually good. But if you actually make that money by luck, you will lead you down to a path where you are gonna like increase your sizing, but you are actually not good. You are actually just lucky. So it's better you make the money from the right reason rather than just being lucky and make the amount of money. Yeah, on a long run basis.
Yeah, no, like I 100% agree. I feel like it's good to be self-aware and understand your strengths, right? For example, like I don't understand to think about AI or GPU markets. So I see render shield a lot, but I'm like, you know what, like I'm okay just being in my own lane, focused, flourishing, and whatnot. And you mentioned, I mean, throughout this podcast, you dropped a lot of golden nuggets about like your philosophy. But how would you characterize your investing style, and what gives you an edge? Like because I think edge is something that every investor or trader needs to identify.
I think my style is very fundamental driven, medium term asset picking style. So I select a few high conviction investment, usually between 10 to 15. And usually the top five will have the highest lion's share of the portfolio, and stick to it. And we constantly reevaluate our investment thesis, both from a top down and a bottom up perspective. And like adopt a liquid venture approach. If we are right, we should own more. If we are wrong, we should actually reevaluate why we are wrong and then exit the investments. In terms of ages, I say actually I think experience do matter a lot. I think that a lot of this bull market emotion, it's not easy to conquer them if you experience it for the first time. I certainly have paid my tuition fees in this market and learn a lot. And even until right now, I will still make some mistake here and there. So I think what important is this mistake, is not existential. So I think my experience in this market give me a lot of edge. And also I think I do have the pretty good mental fortitude to tackle this market. I think sometimes people will, a lot of participants will not be able to tolerate the kind of volatility with their portfolio. I think at a certain level, you just have to look at it. You need to abstract the money component. You cannot just keep thinking, oh, my net worth is up 3 million, or my net worth is down 3 million, or what am I going to do? I think to a certain level, you need to abstract this away and look at it purely from like a process, like a perspective, Yeah. So this is something that some people are able to do better, and some people are not able to do so as much.
Yeah, I've definitely paid my tuition fees as well. You've been in the markets for basically, let's say, 6 years or so. What are some trading rules or investing rules that you live by? You've learned. I mean, we've all learned a lot through like the bull markets and the bear markets. Um, what are the biggest lessons that you've learned that you think is going to be beneficial for the audience to hear?
I think one of the biggest thing, I actually wrote a thread about this, is like there are, I think you need to have like a very a principled view on what are the things that are right and wrong from a like a principle perspective. There's a lot of the sins that will be clouded in a bull market, and I think that is what lead our industry collectively to have so many problems the last few years. And just because some practice are widely accepted by the market doesn't mean it is right, and doesn't mean it's something we should do. I think this is something that if you are able to have a very good uh, grasp on it, you'll be able to avoid a lot of issues. So I think right now we also look at it as like, I mean, besides just looking at the upside, you also need to look at what are the problems and issue it will create. I mean, sometimes it's also not just about losing the money, but it's also about some other unexpected problem it will create from a non money perspective. And I think this is something that the industry was very bad at historically. We just, oh, number go up, a lot of the issue are suddenly not an issue, but that's actually not the case. It is still an issue, and you still need to solve it. So I think this is something that we have learned a lot. So some of these projects, you can pump 10x, 20x. I'm actually quite at peace of passing this, because I some of the project, they adopt a very aggressive Ponzi-nomics, which I know I don't think it's going to be sustainable. You can do it as a trade and get in and get out at the top, but I don't think we are that good at timing this on a very short term basis. So for us to miss out on this kind of thing is something that is part of the process. We will not feel so FOMO over this, but what we do feel FOMO is something that we should have caught on but we miss it now. So I think that is something that we investor need to reflect on. But if something that you know is not part of something that you will touch, and it happened to mega rally, you should feel quite okay, just not participating in any of it.
Yeah. How important is gut feel when it comes to trading? I feel like that FOMO, right? It's like you're bullish something, but you don't buy for whatever reason, and it pumps, right?
I
Like,
think you should only believe your gut feel if you have accumulated enough experience in the market. So I think everyone define gut feel a little bit differently. I think some gut feel are formed by intuition, by a lot of the subconscious knowledge that have accumulated over the past, past many years. I think some people have it. If you are like very new to the market, you probably should not trust your gut feel too much. But if you spend enough time, you have built certain kind of pattern recognition and heuristic. I think that kind of become quite important. But it can still be wrong. And what important is that if you're like, if this is wrong, like, are you gonna be fine? Yeah.
yeah, there's definitely a survivorship bias too, right? When it comes to gut feel, it's like some trader follows their gut feel, they make 100x, and then there's like 20 traders that follow their gut feel and they're blown out, but you don't hear
Yep.
about them and whatnot. Like what do you think are some biggest misconceptions about the crypto markets that you see that you think the audience should start to like think about?
I think one of the biggest misconception is crypto is only about trading, speculation. There's nothing investable. I don't think this is true, because when you look at it, there is a lot of the things that are actually very investable. But they just, as a percentage right now, they are a very small percentage of the market. So I think this is something that is often confused. People look at it and say, "Oh, everything is a scam," and then you get some maxis that Bitcoin solve everything. But I think the truth lies somewhere in the middle. Beside Bitcoin, Ethereum, there's still a lot of very high quality asset, but it's also true that a lot of them are not investable, right? But there's some of them that are very investable. Those are actually very good. So it's something that you like. Yeah, the truth is somewhere in the middle. Like, probably out of the 1,000+ coin in the space right now, I think less than 50 of them are investable. But some of these 50 are some very high quality assets that you want to own for the foreseeable futures. Yeah, so I think some people need to be able to look past. You need to be able to look past 98 to 99% of the scam, because the 1% of the good asset are just so attractive that you actually really want you will be willing to overlook the 99% of the scam to invest in the 1%.
Got it. Yeah. So I want to thank you for taking the time. I only have 2 or 3 more questions. Um, you mentioned scams, non-scams, but like the non-scams are gonna go up a lot. Hopefully. What do you think the next bull market looks like? Do you think it's going to be the super cycle, right? Like a 10-year bull market? Do you think it's going to follow like the same 4-year cycles? What is it going to be catalyzed by? Do you kind of have ideas on what's going to lead? Like if we're at point A and point B is the next bull market, how do you think we get there?
Yeah, I think, yeah. I mean, it doesn't matter. As I said, it doesn't matter how much the scam pump. I mean, if it's not something you're gonna touch anyway, you shouldn't pay too much attention to it. I think that's generally what we do. It doesn't matter how like say Hex, right? Hex was a very famous outperformer in the last cycle. We didn't touch it, and we feel completely okay with it. So it doesn't really matter for our process. In terms of is it a super cycle? Are we going much higher from here? Um, I would like to say that I mean, a lot of us tend to say something with a very high degree of certainty, and I think that that's not the case in life in general, and especially for crypto. A lot of things in crypto is path dependent. In hindsight, it's very easy to say, oh, Bitcoin, you should buy Bitcoin at $1 back in 2013. You shouldn't have sold it. But I think there's actually, it's also true that a lot of things that could have just made Bitcoin go to zero, in the past 5 years. It did not happen. Doesn't mean that in alternative reality it cannot happen, right? I mean, what if Bitcoin in the first 2 to 3 years it has a very, very major unfixable bug that just like it broke the consensus, then your Bitcoin might have just died in the first few years, right? So there's a lot of things that's path dependent. So I think that is also good to, just constantly absorb new information and pay attention to the latest development in the space and the market. So, there's actually a lot of like a scenario that can make crypto become very, very bullish from here. Like we really enter the super cycle. But there's also, again, there can be some situation that make crypto continue to be challenging to invest in right now. So I think there's actually quite a lot of path dependency, especially at crypto. At a current market cap, we are not that big, but we are not exactly that small. I think we are like a early, but not like super early kind of situation. So the industry will not go to zero, but the right question we should be asking ourselves is this space a 10 trillion space, or is it gonna continue to be like a 1 to like a 3 trillion kind of space that we're looking at for the next few years? I think that is the right question to ask, because when you look at traditional, like let's say asset class, right? There are a lot of asset class that didn't go to zero, but there is no growth. It's just not very exciting to invest for the moment. So is crypto going to be like that? I personally do not think so. But is there anything that can make crypto become like that? Yes, possible. But right now I assign it as a low probability scenario. Yeah. But I guess this answer is a bit too complicated. But yes, I think on balance, I do think that we are looking at a very favorable market condition for the next 12 months.
Got it. Yeah. Definitely. Everything has a path, or everything is path dependent. And I think the biggest lesson is to just pay attention, right? Just not burn out. Just pay attention to what's happening in the markets. Adjust your views if market conditions change, the facts change. And the last question I have for you is on the topic of burnout. So I've dealt with burnout a lot in the past couple of years. I'm sure you have as well. How do you keep a work-life balance? Do you have any life alpha for, I guess, like my listeners? Because we're all trying to make it, right? How do we make it, right? Like how do we not burn out? How do we stay composed? How do we just keep our hands not like paper but made of diamonds?
Yeah, I think you one of my favorite phrase recently is, there's no such thing as a work-life balance. There is only work-life integration. So to a certain extent, you cannot hate what you are doing, and you have to enjoy the process to some level so that you can make it sustainable. So I think learning how to make the process as enjoyable as possible is pretty important to ensure that you do not get a very big burnout. If you really do not enjoy the process, you hate looking at crypto, you hate talking to crypto bros, that's going to be very challenging, because you just do not enjoy it, and that is the you burn out pretty quickly. So I think really build surround yourself with like like-minded people you like to talk to, like find some activities you actually enjoy doing. It doesn't have to be the most profitable activity, because a lot of people tend to think, I have to be a trader, I have to rotate to the next best coin, because there actually are a lot of builder kind of people. If you're so interested in crypto, you might as well just join a project, help them build, and you actually might make as much money from doing that as opposed to trading on the market. So really finding stuff that you enjoy doing is just a pretty sustainable way of ensuring the less burnout from the space.
Awesome. Well, thank you, Arthur, for taking the time. I think this is a great episode. Do you have any final words for our audience?
No. I think stay safe, everyone. Enjoy the bull market gains.
Enjoy the bull market gains. There you go. And just one last time, can I see your diamond hands?
Yeah. Thank you for having me.
Okay. Wait, can I see your diamond hands? I want to see you clench your.
You want to see the hand?
Yeah. There you go. There it is. All right. Bull market confirmed. All right. Thank you, Arthur. And hope you guys enjoyed the episode, and see you next week for episode 7. Bye-bye.
Thanks for having me, Taiki.